We're not going to get into the who, what, when, where, and why of what took place. We'll say Friday was a bad day, plain and simple. Our best advice is to follow your plan. Don't deviate, don't worry, and block out the noise. Historically, every 2 to 3 years, the market has a 10% correction. Every 3.5 to 5 years-ish, the market has a 25% bear market. It's a repeatable pattern. The market does it over and over again. It's been doing it for decades. So historically, we already had that happen in early April. So this is just really a blip. Yes, we were down 2% plus on Friday. It is what it is. We're pulling into the 50-day. We'll get into it. However, there's no reason to believe that all of a sudden markets are going to crash. That's not really what we're seeing. The reality is a lot of people are of the opinion the market was incredibly overbought. Maybe individual names, yes. The overall broad market, no. Sitting at all-time highs and grinding our way up does not mean we're overbought. There was no parabolic moves within the indexes. So you have to keep things in perspective. With that being said, for those that are looking for good companies to buy on the cheap, you had a sale on Friday. Now you can start to take advantage of that come Monday morning. Good companies will always do well, regardless of their stock price. Eventually their stock price will be a reflection of that. Markets did get hit. We're not going to discount that. However, in the bigger picture and the bigger grand scheme of things, Friday was really just 2%. There wasn't really anything to jump up and down about. Problem that makes it more dramatic is as these indexes get more and more expensive, S&P, NDX, the move from a dollar perspective or a point perspective seems rather huge. It's still 2%. We're only about 3% off highs in the S&P. We're about 2.5% off highs in the NDX. So the truth of the matter is this was really more a big fat nothing burger. Dramatic, yes. In the grand scheme of things, not really. We have earnings coming up in a few weeks. Estimates are being ratcheted up. So we believe that the path of least resistance for now continues to be up. So let's just get into the S&P and see where we are. The S&P right now is right at the 50-day. The ideal trade would be a break below and a Monday morning gap that you could buy against the low, meaning get a situation where the market opens up, let's say over here or at the 50, and then, starts to move back up. That would be the ideal situation. Knowing the way markets operate and trying to screw the most amount of people in the shortest amount of time, we're probably going to open up somewhere in here, which is going to make the trade more difficult. However, we're at the 50. Yes, S&P is broken. Friday was a stand up and take notice day. We're not going to discount that. However, we're coming to our first touch or somewhat touch of the 50-day in the S&P going back all the way to May. So we believe it's going to bounce, and we believe that we should hold and maybe chop around a little bit and then start grinding our way back up. So that's S&P. Let's look at NDX. Now, NDX is kind of interesting because the NDX hasn't gotten to its 50-day yet. It's a ways to go before we get there. Now, granted, it's a $24,000 instrument. So, with the 50-day basically at 24,000, NDX closing at 24,221. We believe that this low is probably going to hold. Maybe we get a little bit below it, but again, we don't think we're going to get too much more below this. And then again, just like the S&P, chop around and then find its way back up. Let's look quickly at the Russell. Russell also looking a lot like the NDX, holding a little bit higher from its 50-day than the S&P. It did get below this 2470 area that we were looking at. We poked above it, couldn't hold, fell back down. We don't see any reason for this not to do another retest of it, possibly break out. Russell's looking really good. Again, we're looking at things from a more productive fashion as opposed to fear, because we think that fear has no place. You have to look at things from the vantage point of what makes sense, where things could go, Where are we? Yes, Friday was a stand up and take notice day. It was very dramatic. But in the grand scheme of things, what does Friday really do? Well, it gives you opportunities to buy things on the cheap. When things go on sale, everybody runs to go and buy them. When things go on sale in the market, everybody runs away and they get scared. Now you have a sale. So when you have a sale, you want to take advantage of it. You want to buy good companies when things go on sale and they're cheap. Let's look quickly at the stocks, see how that fared. Again, that did even better. Held the 50, came into the 21 day, held. That's looking pretty good. Let's look quickly at the NYSE FANG and then we'll get into some individual names. NYSE FANG looks a lot like the NDX. It's holding this zone that we mentioned last week, the 270 to 15,950-ish area. It's holding it. Yes, we closed below it. However, we think and we believe that the market probably gets back into this and chops around and then tries to figure out what it wants to do next. But as much as there was damage and Friday was a little bit of a bloodbath, wasn't disastrous. Let's get some individual names and then we'll wrap it up. Now, a lot of the charts are going to look like what Apple looks like, especially with this Friday move. It's coming. We know it. So now the question is, how do you deal with it? So we think the next level that Apple is going to come into is about this 241, 240-ish area. We think the stock probably gets there and holds. This is the breakout level, holds and then bounces. So we're looking at that 240-ish area. We think that's probably the better spot to look to buy this. Microsoft holding where it needs to be honest with you. Holding the 50, yes. Again, a lot of these things are bent. I'm not going to regurgitate that, but holding where it needs to. It's still within the zone, that 505 to 520-ish zone. It's holding fine. Microsoft, as much as it was resting on the 50, looks fine. I mean, it's not great, but it looks fine. Amazon, this is what needs to hold. This 215 area, 216 area needs to hold. This is your line in the sand. If the market holds this, you're good. If the market does not, then obviously the 200 comes into play. But we believe that if it doesn't hold this, the 200 is not going to hold. And we're probably going to make a run for 210. Probably going to make a run for these lows over here, 207 to 210. So we think the market where Amazon will go if this doesn't hold, and it'll do it fast. If it holds, you know where you're getting out if you're wrong. 215, 216, that's your area. If you want to be a little bit more liberal with your stop, you can use the 200. Everybody's keying in on that. So if you put your stop there, you're probably going to get stopped out. So you really want to be looking at this low over here. This 216, 215 area. This holds, you're golden. This doesn't, get out of Dodge. Google. So Google is interesting because Google was leading the market higher. Now, it's still holding up better than most names. However, it is a little bent. One thing to notice is that the gap is holding. This gap over here, this gap low of 224.79. So let's just say 225 is holding. Now, granted, we're at 236. We're a country mile from it. However, there are certain spots that you want to see hold. You want to see this 233-ish area hold if it comes down to it. If not, the buys are basically above Friday's high. Use Friday's low, and that's the end of that. If you want to get a little bit more aggressive, you have a couple of other spots. If it gets above 245-ish, then you can use this low over here. Once we get above this, that low is 244.66. If you're buying 245, using 244 as your stop, probably going to get stopped out. So you don't want to be as aggressive, but this is really what you want to see. You want to see Google get above 245. Okay. Let's go to Meta. Meta looking fine. It's holding really where it needs to hold, to be honest with you. It's not a barn burner and it's not explosively awesome, but it is holding where it needs to. We're only highlighting market moving names. The names that move the market is what we're going to focus on. And as well as we'll focus on the park names. But outside of that, we're really going to focus on what's moving the market. The primary reason for that is when you get heightened volatility like we have now, and we find ourselves in this type of heightened volatility based environment, you really need to focus your attention more on bigger picture, more not necessarily micro with individual names, but macro from the indices perspective and see what's driving the indices to get an idea of what's happening. If you're investing, you're looking to find companies on the cheap that you get a sale and buy them. If you're trading, you have to be more macro, more bigger picture, focused more SPY, Qs, IWM, SMH, etc. So Meta is holding. There really isn't anything to get excited about until the stock gets really above this 735. You really got to see Friday's highs get taken out to the upside. Then you can get excited about it. Other than that, it's not really the best place to be. Let's look at NVIDIA. Now, granted, NVIDIA had a stand up and take notice day. Again, it's holding exactly where it needs to. This 180 to 185 zone, it's holding. It's a retest of the breakout point. So this should be on your bucket list of things that you want to be involved with, because we don't see why this should fall apart, at least not yet. Right now, it's just a retest of the 21 day. It's been riding the 8-day, and then it breaks through, touches the 21 day, and then kind of goes again. So right now, this looks fine. You buy against Friday's lows. Let's look at Broadcom. Broadcom is a little bit more squishy. We're getting into the gap. We're probably going to get a gap fill. So that would be around over here. This 308 area. That's probably where it's going. If the 50 doesn't hold, then you have to look for other spots. Right now, your other spot is this 308. This would be the gap fill. So logically, it appears that the gap fill makes more sense right now than the 50 holding. That doesn't mean the 50 can't hold, but the probabilities are that it's probably going to fill the gap. Let's look at Netflix. Netflix was, for the most part, green on the day for most of the day. Yeah, it kind of got hit towards the end of the day. But for the most part, it was green on the day. Now, some people can say that Friday's action, this is an RDR. You could say that. However, the move really wasn't so stupendously awesome that the reversal seems likely. It's probably just going to chop around this 1220-ish, 1210-ish area and then figure out what it wants to do. It probably doesn't get going until earnings. So this is probably going to be, to a certain extent, a little bit more on the deader side. CrowdStrike, double topped. Still looks fine, but just be aware of this double top. It's a little bit of a choppy, sloppy, messy zone right now, so it's not amazingly awesome. So if you're going to do it with smaller size, but be aware of this double top. And then ServiceNow. ServiceNow is nothing really to write home about. It's really just doing a whole lot of nothing, but it's below all the moving averages for those that play that game. It's really not doing anything on the long side. On the short side, you're probably looking for this 875-ish zone, and then it starts to get a little bit more interesting. Maybe it gets down to this 840, but we think the first spot and the first line of the sand is going to be this 875-ish area. All right, let's get into the park names. Is one. So if you're a trend line person, you can kind of do your trend line like this and kind of line it up. Again, we want to reiterate this because we've said it in the past. We want to drive it home. Lines, moving averages, Fibonacci, MACD, RSI, whatever you want to look at. They become very irrelevant when somebody really needs to move something. All that stuff just goes by the wayside, and it'll be moved and it'll go wherever it wants to go. How high is high? Who knows? How low is low? Who knows? And the market's there to hurt the most amount of people in the shortest amount of time. And that's just really what it does. So people are always trying to catch bottoms. They're always trying to catch tops. Well, how much higher could it go? Or how much lower could it go? It could do whatever it wants. We can only imagine how many people tried to catch bottoms on Friday and just got their clocks cleaned. So it's not a game that we advocate. We think it's a fool's errand. We believe that you should find spots where you want to be in good companies or commodities or whatever trading instrument that you're in. Find spots where it makes sense, where you can manage risk properly. If it's not there, then it's not there, and just wait. In this game, patience is a virtue. Now, the reality is Palantir is looking fine. I mean, it's very sloppy and choppy. It's got these two stand up and take notice type days, but the market's really just chopping around. So it's not really in play like it once was. Okay. So that's one of them. Let's look at the next one. So Aploven really got hit hard this week. Now, one of the things to know is that we did hold the gap, which is kind of interesting. We got to the 50, which ties into the gap, held. We didn't get quite to the gap, but we did get to the 50. The way that this is acting, it looks like it's going to hit the 50. It's going to slice through it. This is probably going to get taken out. And you're probably looking for a gap fill. So your gap fill is about 511. So that's really what you should be looking for. That's probably where it's going. A lot of these names are bent. They're not necessarily smashed and broken, but they're definitely bent. So you got to be a little bit more careful, size down, find your spots that make sense, and then go from there. The gap fill makes sense right now. That's just where it looks like it wants to go. And then if you're going to buy the gap fill, so 511, you got to be using this low of which, and it's going to be a little bit tricky, but you're going to have to use this low of about 469-ish, which is some risk. Size accordingly. Now let's get the hood. Hood also got hit. It was a little surprising because, and we're going to end with that stock, but it was a little surprising because a lot of times in market downturns, a lot of these brokerage type names do very well because they have a lot of volume happening. There's a lot of trading activity. So they generate a lot of money, especially on days like Friday was. Like they really make money. So we're a little surprised that it was down as much as it was. It was hit almost 9%, which was a lot. Usually these brokerage names are places that you could hang out, but it was when it was. Break the 8-day. It looks like it wants the 21-day at about 134.44. You could see that. It's probably not going to get there. And you're probably looking at about here is where it's probably going to stop. Obviously anything can change on a dime, but it probably looks like it's going to try and make a beeline towards this 134, 135 and a half-ish area and then stop. But again, we'll see how this plays out. And then last but not least, let's go to coin, and then we'll end off with one last name. And see, coin makes sense that it got creamed, even though it's a broker, because a lot of the crypto guys had a rough day on Friday. But again, there is trading activity. So these guys do make money on these types of days. Usually a lot of these brokerage names, whether it be in the future space, equity space, or crypto space, there's a lot more trading activity. So they do generate more income and more revenue on those types of days. Usually they're not getting creamed like this. However, obviously hood and coin are more on the speculative side. Your speculative assets, the trading arena is a little bit more, their trading customers a little bit more, tends to be a little bit more emotional. So they have a lot more activity. So, and what we mean by that is a lot of their customer base has a tendency to get blown out of markets and then never come back again. So that's probably one reason why they would get hit like this, but it is what it is. Obviously we took out the gap. We didn't hold that. If this doesn't hold, you're probably looking at this 337, 340-ish areas where it's probably going. If the 21 doesn't hold, if the 21 holds, then you're just going to use Friday's low as you're out. And last but not least, the one stock that we think is, and it just doesn't disappoint, when markets are getting creamed over and over again, the one stock that's usually always green, I know we say usually and always, but it's pretty much always green on a day where markets are getting creamed, is CME. It's almost like clockwork. Markets are getting hit 1%, 2%, whatever it is. CME will be green on the day. Now, why? They are the one and only exchange to trade equity indices. If you want to hedge S&Ps or Nasdaq or Dow or Russell, you got to come to them. They're the only game in town. Because of that reason, they generate so much money on their hedges, on people. They generate so much money on trading volume because people are hedging positions using futures. This is why they're always green on days when markets get creamed. Market was down 2%. CME was up 1.5%, 1%, 2.5%, whatever it was, 2.5%. CME was up 1%. That's telling you something. It's almost like a hedge. When you see that the market's getting creamed, where should you go? You want to hide. Instead of going to utilities or going to telecom stocks, you just go to CME, and it's a great company. So CME looking good. Granted, a little bit of a double top over here. Right over here, a little bit of a double top. However, the stock, if the market continues to go down and go down with some velocity like it was on Friday, which we don't believe is going to continue, not in the way that it did on Friday. We think that that's over and done with. In today's electronic markets, usually things happen very quickly. It's pretty much one and done, two and done, or three and done, whatever. It's a 1 to 3 day event. Then usually within 4 or 5 days of that event originally happening, it's like it never happened. The market's way higher than it was beforehand. We're not permanent bulls, and we don't think that, you just got to buy everything in sight. However, logic dictates that really Friday was more of just an aberration. It was driven by headline. Market needed an excuse to kind of reset a little bit. We've reset. We believe the market should continue higher. Our next catalyst will be in a couple of weeks, since earnings season is right around the corner. That gives a catalyst. A tweet does not give enough of a catalyst, especially since a lot of it was walked back in the evening. Friday evening, a lot of it was walked back. So you just got to play it with a little bit of logic and a little bit of common sense and not emotion. With that being said, we thank you for watching, and we'll see you on the next one.